Hi, welcome back to Simply Accounting. In today's video, we will discuss accounts receivable and accounts payable. So let's get started. An accounts receivable is an asset account, and accounts payable is a liability account, so that's one of the differences between the two of them. An accounts receivable is when a customer or a business borrows money from another business, and then they promise to pay the money back at a later date. Another example of this would be if a customer buys an item from you, but instead of using cash, they use accounts receivable, promising to pay the amount back at a later date. So for accounts receivable, we have a T account here. The beginning balance for accounts receivable would be on the debit side of the T account, and any increase to accounts receivable would be on the debit side as well. Any decrease to accounts receivable would be on the credit side of the T account. Now this is because it's an asset, so like with cash, the beginning balance would be on the debit side and any increase would be on the debit side as well. So the other one is accounts payable. Like I said earlier, it is a liability account. So in accounts payable, this is when you or your company borrows money from a creditor or another business, and you will promise to pay the amount back at a later date. So an example of this would be if you purchase an item on account from a business, so that means that you don't pay with it in cash, you promise to pay the amount back at a later date. So the T account for accounts payable, it would be the opposite of accounts receivable. So the beginning balance is on the credit side of the T account, and any increase to accounts payable will be on the credit side of the T account as well. And any decrease to accounts payable would be on the debit side of the T account. So let's recap and review what we learned today. We learned that accounts receivable is when a company will pay you back for money that they borrowed at an earlier date. So another example of this would be an IOU from a friend. So let's say a friend borrowed $20 from you and now they're paying you back. That would be an accounts receivable. And in accounts receivable, the beginning balance and any increase to the account would be a debit, and any decrease to the account would be a credit. So for accounts payable, we learned that accounts payable is when your business borrows money from another business and now they're paying the amount back. So this would be an IOU to a friend. So you borrow $20 from your friend and now you're paying the money back. So and then we learned in accounts payable, the beginning balance is on the credit side of the T account, and any increase to accounts payable is a credit, and any decrease to accounts payable is a debit. So I hope you learned and understood everything that I taught you today, and I hope to see you next week on Simply Accounting.